Hello, today is February 18th, 2017. My call Thursday night was that there were positive elements and negative elements in the trade. I'd like to thank everyone who made polite comments on my videos and via email. One of the comments was my call was too wishy-washy. Well, wishy-washy was the right call. We haven't had a close very different for 3 days straight. We've all closed about the same price. So if I had said we go up or down, that would have been wrong. During the day, MEJT said that the morning was not likely to make any significant progress. Gave an ultimate sell, ultimate buy. We didn't make much of a move. That's what the system usually calls for. It now says the rally is false, gives us a target of 2342.52, most likely to print by Tuesday. Well, I said that this MEJT target, 2337.63, had an increased risk to fail, which it did, and I think this one has an increased risk to fail as well. But that's what the system calls for. We said that the most likely thing on Friday was to promptly trade outside of the day's range. You have to use futures, and if you do, you'll see that the low in futures here was a half handle higher than this, so that prediction of the most likely thing failed by about 3/4 of a handle. The next most likely thing is we close a little changed. 3 1/2 handles counts as a little change, but what's really critical is that prior to this last fling up, we hadn't changed much at all from this close. So that is the next most likely thing, and that's what happened. Well, this is a strong resistance area. We've hit it so many times. I think it's a matter of time till we break through on the upside, but that doesn't mean it's the next move. We've also had dramatic breadth improvement early in this month when the market was hitting new highs. We weren't hitting new highs in breadth, now we are. That's a positive change. But even though I think we'll go up at some point, that doesn't mean it has to be the next move. Friday's chart almost always leads to a close over these highs. If that doesn't happen, it usually happens when the market opens the next day. That didn't happen. It's negative, but when you close a little change, it's kind of a day which doesn't really count. You have to extend it a day. So almost always we break out and hit new highs when the market opens on Tuesday. There is a catch because you've got strong resistance here, which we'll talk about. And if we don't break out to a new high Tuesday, I think the most likely thing is we drop sharply right from the open and undercut these lows. This is a wall into the close, straight up, no correction, a Hobson close, closing at the high of the day, and you wait till the last 5 minutes. That's not when the smart money moves. Usually it means that the retail customers are covering shorts or going long at any price. It tends to be negated early when the market reopens by gapping down sharply. The catch is when you're breaking out to new highs, it doesn't always work. It works about half the time. That doesn't help us. Here's a 65-minute chart. These DeMark counts haven't worked too well, but there is a combo and the sequential sell right at the high with no fudge factor at all. We also have Fibonacci resistance at the high. If that's wave purple C and you set it equal to 61.8%, you'll see there's wave purple A. So we have a relationship. If you take this range, take half the range, it's right over here. Gann likes to do things in thirds. 1/3 of the range is right over here. So we have strong resistance here. If this holds, that can be a major top. But of course, if we break through, all this thing falls apart. So I think the open on Tuesday is going to tell the story, not just for Tuesday, but probably for the next few weeks. All we have to do to go higher is to gap out over these highs, but if we don't do that, I think we'll gap under these lows and probably have a drop perhaps to around 2172. So Tuesday's open's critical, and that's today's call.